Welcome to Legacy Blueprints, where we help you build a strong financial foundation for generations to come. Life insurance, that's a scam, according to the public.
Scam stands for still confused about money.
I like that.
Nothing is a scam when it comes to the insurance world. And the reason nothing is a scam is because it's a transference of risk. However, a lot of people don't fully utilize the power that life insurance has. Life insurance, maybe we shouldn't be talking about this because the government may just pull the plug on it, but life insurance still has the tax advantage that if you properly structure it and utilize a cap or participation rate strategy based on an index, you can end up investing in the market, limit your losses, or protect yourself from losses while having upside potential and have that money tax-free because it's tied to a life insurance policy rather than to a traditional investment account. So it's sheltered by this tax code.
Before you say that there's no scam out there, they should have like tangible things that we can look at or at cases.
I'm not saying that there are no scams. I'm saying that in insurance world, there's the least scams. And the reason for that is insurance is highly regulated, probably the most highly regulated ever.
What do you mean by regulated?
Regulated. Okay, so what protection do you have by depositing your money in a bank?
The FDIC.
The FDIC. Insurance. The insurance.
Wait a minute.
Insurance. Federally backed insurance. But when you deposit $10 into your bank account, what do you think happens to your $10?
It stays there forever.
No. I mean, I'm sure you guys know this, right?
Plain devil out.
Yeah. They take $1 from that 10 and they put it into a reserve, and the $9 they loan out to somebody else to charge them interest on. So really your money's not there. Everybody came to the same time to the bank to withdraw their money, they wouldn't have it. Really your bank is a scam because an insurance company is required to have enough assets on hand to be able to pay out all the claims that are protected.
Wait, a hedge fund, mutual fund, or the bank, they can do fractional lending, that's actual cash.
So are you saying life insurance is actually more reliable than having my money in the actual bank?
Yes, it's more secure. There are more protections. And whereas when one bank fails, the government has to step in. With insurance companies, before the government even steps in, there is an insurance guarantee association that will step.
But I'm never going to need this insurance that I'm paying for. It's only going to be beneficial when I'm no longer here.
That's not true. That's actually a myth of life insurance for a lot of folks. Core idea of life insurance is to pass on wealth to your family members tax-free. But there are tools within life insurance that provide for legal tax shelters, so that way you can tap into that money for emergencies, or by borrowing against it, you can tap into that money tax-free, just like the wealthy do. So this is a strategy the wealthy use all the time. When Elon Musk was buying Twitter, how do you think he bought it? Through that. He didn't go out and sell out all his Tesla stock and cash it out, pay a lot of taxes to buy Twitter. He went to the bank, said, I will give you my Tesla stock as collateral if you give me a loan for $52 billion. Did he make any income when he took a loan out?
No, it's tax-free.
No, it's tax-free. And that's exactly what you can do with a life insurance policy once you fund it enough.
Yeah.
And then you have that tax-free income while you have that growth. Because now life insurance policies allow you a function to be able to tie it to the index. And that index is all stocks combined. Essentially, how I like to call one of the most popular products, the IUL, in life insurance world. I like to call it the hedge fund for everyday Americans.
IULs, are they actually invested in the market? Or are they actually a hedge fund? Are they an index fund? Just so it's clear of that.
They're not actually invested in the market. They're tied to the performance of the market.
Despite some other financial platforms that wanted their name, one is like a former Egyptian pharaoh. They like to say IULs are index funds. They're not. They're not actually tied to the actual market. Do what we crowd now.
Yeah, correct. The performance of the IUL is tied to the market because the company is investing other assets in it. But the actual account itself is not in. Which is why they can provide you protection so that you never lose the money And they also provide you upside potential and tax break. So that's the benefit of it. But either way, why would you not, even if you're just buying life insurance, for the whole concept of passing $20, $30, $40, $50,000 to your loved ones, why would you not do it? Are you that careless about your family? And you know it's a guaranteed event, right? Everybody knows they're mortal. To me, the funny thing is people always call life insurance scam. But life insurance is one of the very few products in insurance space that's guaranteed to happen. There is no risk.
You can't avoid that.
You cannot avoid it. It's going to happen. If you buy a whole life or a permanent life insurance policy, you are protecting a guaranteed event. It's just a matter of time.
Now, I've heard that when it comes to life insurance, you typically invest more than or you typically get more than you invest in. Is that true?
Well, depends on how long you live. So in most cases, depending on which product you choose, you will get more money than you invested in. That's the strategy. However, if you buy term policies, you're solely paying for protection, and you only get more money for your family if you pass away within a certain frame. For those index universal life policies that grow based on the performance of an index, they will provide you with more money at every point in turn that you've put into it. Whole life policies might provide you with more money depending on how long you live, your mortality. But you will never lose a tremendous amount of money, and think of it as positive. If you live a long life, at least you lived a long life. But I'll give you an example. People complain about this all the time. Well, what if I live to 110? Then I ended up paying $5,000 more than my family's gonna get. Okay, I accept that question. But what if you die tomorrow? Then what if the company's given $50,000 for your $50, right? That's one way to look at it. The other way to look at it is everybody looks at life insurance this way, but nobody looks at the most common insurance policy in the United States this way, which is auto insurance. When you buy auto insurance, and for the record, majority of Americans have full coverage. People like to say, well, the state makes me do it. The state only makes you get liability insurance. Okay? They don't make you get full coverage insurance.
Right.
But most Americans still have full coverage insurance for their cars. Majority of people do not take out as much money as they put in. Think about it. You pay for your lifetime of driving. Let's say you start driving at 16 and you drive till you're 7.
Yep.
That's 54 years of driving. Let's say you pay $2,000 a year overall on average for those car insurance per year. How much is that? That's $108,000.
Right.
And how much have you taken out?
Zero.
Have you guys taken anything out?
No, never seen any of that money back.
So I have actually had a couple of fender benders and accidents here and there. And I had somebody break into my car in the city of Chicago. Thank you, Chicago. But still, I, by this point in time, have paid in more than I've gotten.
Exactly.
So majority of people will never get more. And you're only paying for what if you get into an accident, what if your car gets damaged. And yet, nobody says a word about it.
Yeah.
But life insurance, if I live to 110, I'm going to pay $5,000 more. But you're discounting the fact that you're likely going to pay $90,000 more for your car insurance over your lifetime than the one time you have to make a claim because your neighbor scraped your door.
Indeed. And I like how you painted that, when it comes to auto insurance, you're essentially paying for what might happen. But when it comes to life insurance, you're going to be paying for what will happen. Now, we can talk a lot about the details between the different types of policies, what you can get, what you could put in. Now, that can be a separate episode or a separate conversation.
Like a one-on-one consultation.
Exactly. However, let's talk more about just the overall concept. So we do understand that there's value when it comes to life insurance, but tell us a little bit more about how that relates to what you do with Everest. Provide the audience a little bit more clarity on some of the services you provide, the industry itself, why it's important to be even just educated in this regard.
So at Everest, we believe that insurance has a couple functions and it should be a part of every portfolio. But we believe that everybody has an own personal strategy that they should discuss with a licensed financial profession like you two. And they can get those benefits from sitting down and tailoring their strategy to their needs. But at Everest, we know that there is one thing that nobody can escape, and that is the passing away. And passing away in the United States is expensive. We talk about the sheer cost of funerals in the US, we're talking $15,000 to $20,000 on average. And once you get into high cost of living areas, could go up well into the 30,000 space. Even if somebody says, well, I want to be buried overseas, the transportation can get into the tens of thousands of dollars. And as I mentioned earlier on this podcast today, fewer than 4 out of 10 Americans can afford a random $1,000 expense. So when they get hit with these charges, what do? They panic. They turn to GoFundMe. They take bad loans. They put their cars as collateral. They go to pawn shops. You name it. They make bad financial decisions they're going to pay for later down the line. And at Everest, we believe that tying a financial benefit of a smaller policy for just that final expense is great because they will have that money. And at Everest, we help that money be paid out faster than conventional life insurance because we know. So faster, it's 48 hours outside of a 2-year contestability. Okay, so 48 hours. If you live for 2 years, for that policy after that, 48 hours. Now, why is this crucial? When do funeral homes ask you for money? Immediately. Pretty much immediately. So if you have to wait for death certificate or anything else, it's going to take a tremendous amount of time. So on top of that financial benefit that you get, a lot of people don't know where to start when it comes to a funeral. It's that shell shock, that emotional heart drop in your chest that you just feel when you lost a loved one, and you have to immediately spring into action. And at Everest, we realized that a lot of insurance companies were missing this aspect and were just ending a check. Like a bad boyfriend or girlfriend that says, instead of spending a weekend with you, here's $20,000, goodbye. It's not the way to solve it because people will struggle. People will not know where to begin. People will be confused. People will be lost, and they will have to make a lot of decisions rapidly.